Good morning, good morning. We have NFP today, so it's a good day to be trading. Am I muted? No. Now you should be able to hear me. Let me know if you can confirm that. I would appreciate that. Thank you very much. But all right, we're gonna get started here in just okay, thank you. Appreciate that. We're gonna go ahead and get started. We have, like I was saying, NFP to look out for. So mainly NFP, unemployment rate. We'll also look out for these earnings report, and we'll do a quick review on gold, and that way we can prepare ourselves for that NFP report. All right. And then once we go over gold, we have that prep, we get NFP out of the way. As we near 9 a.m., that 4-hour candle close, and like the 30 minutes before NYSE open, and then we'll go ahead and start breaking down US 30 as well, so that way we can be prepared going into NYSE open. But yeah, we could see some good movement today, I agree. We have seen in the past very strong NFP reports, and the impact is sometimes very, very wild, very volatile in the markets, especially gold. Like you will see very large pullbacks or very large continuations in price. So we'll give it about another minute or so, and then we'll go ahead and start reviewing gold, because a few things happened since yesterday. So we'll go ahead and review that. And by the way, good to meet you. I don't think I've seen you in the chat, so good to meet you, my friend. We're here Monday through Friday, every single day around these same times. So good to have you guys. But all right, good morning to everyone. We're gonna go ahead and get started here with gold. And so the first thing I want to do is do a quick review from yesterday's session, because yesterday on gold we were more so on the bullish side, as gold was trading above 44.95s and around the 4500s key area, right? We've been looking at that zone for quite some time. And so the main idea was to really continue looking out for buys above that area. We also got a jobless claims report that came out more in favor of gold buys, right? It came out more on the, let me show you guys, on the, we can say, pessimistic side, because it was a rise in the jobless claims for the US. So that would be considered more negative for the US, right? And so when we were looking at dollar, we saw that the dollar was weakening at that time. So the buys above that zone made sense, right? And we had this area marked off as our first target. And then of course, above that, we had these highs on gold. But gold really only got to that zone, and you can see it precisely rejected those highs. We failed to break above. And so the ideas remain the same, because we knew that above this area of interest, price action can very much continue to reject, and we can continue to look out for buys above that zone. But below that, as I mentioned to you guys, be careful if you start to see candle closures below that zone, because of the previous price action that we've seen once we get candle closures below that zone, which is you start to see strong moves, strong sell-offs below your area of interest, which was around the 44.95s, right? If you've been joining the streams, you've seen us deal with this same zone in the exact same way, right? Below those 4500s is where we have those strong sellers come in control. And you've seen it in the past. You saw it here, you saw it here, you've seen it here. Same thing with yesterday. Once we started to get candle closures below that zone, we failed to break back above, and then we really just had a strong sell-off down into these lows, where we had a momentarily bounce. You can see it was very short-lived, very short-term move. Only got to about these highs before, once again, candle closures still below that zone, and then we had a deeper sell-off down into these lows right here. So let's just go ahead and adjust our zones. So we can move this zone a little bit lower, down to these lows at the 44.38s on gold. We have this zone. This is going to be a zone that's on the lower time frames. Like if we look at the lower time frames around this area, we're going to see price reacting at this zone multiple times, right? We'll look at that on the lower time frames in just a second, but I wanted to just circle that out. And then we have highs being created around this zone. And I'm going to be very precise. I'm going to try to be very precise about this because, again, we have NFP coming out within the next couple of minutes. So we have to be prepared for that. Give me 1 second. Good morning, guys. Good morning. Yeah, we still have about another 4 minutes precisely until the NFP report comes out. And so again, we know that that's going to bring strong impact. Let's just make sure we have our zones marked off. Again, we're creating these highs currently right here around the 44.75s, which is the current price action that we're seeing. And this zone as well, which is more on the lower time frames. And I'm being more crucial about these zones right now because of the fact that we're expecting to see strong volatility and strong volume coming into the markets within the next couple of minutes, right? So we want to make sure we have all of these zones marked off. Like I was just saying, on the 1 hour or even like on the 4 hour, we see that this zone is a previous zone of interest, right? Like I always tell you guys, look to the left and confirm that. So you have 44.60s, the 44.60s, it was this low. 44.60s, it was this resistance right below the area. Same thing here, it was a resistance, stayed below the area. Once we got above, it was now creating a support, right? So around that area, we clearly see the reactions. It's just right now, we don't see something like this, like something very strong, like a support. We more so see wicks being left at that area. But like I was telling you guys, look at the lower time frames and see what that looks like as well. And you can see very clearly right there, like on the 30-minute, very clear support right there. 15-minute, very clear. Its price basically just stuck, most likely stuck in this consolidation because of the fact that you have NFP coming out within the next couple of minutes, right? So price action right now is just very much, let's call it on the sidelines. Investors are very much on the sidelines. So let's be patient for that report to come out. In terms of what we can expect from this report, to make it easy for ourselves, like I was explaining to you guys yesterday, we want to see the economic data come out one-sided. We want to see it either very strong, very weak, or just neutral, right? That's what we can expect to see in terms of like when we want to see higher impact in the markets, right? When we have strong data going against what it says there on the market right here. So again, we have like about like 1 more minute until that gets released. Good morning guys. Yeah, we'll be paying attention to that report. We could expect to see, like for example, if we see a very good report, like we see that the labor market is still very good in the US, right? Still very stable. Then we could expect for that to bring more dollar upside. And when we look at dollar, if we're going to talk about dollar upside, we want to make sure we stay above this key area right here, this area of support that we're creating on this 1 hour. If we see a strong labor market and we see that dollar is staying above the 99.2s, then we could expect for gold to get pressured and gold will have stronger moves towards the downside, in my opinion. I don't want to create a bias too strong right now because really anything can happen with the report and price action can go either way. So I would spend unnecessary time building a bias and then needing to adapt if it goes against that. So I'd rather, let's just wait a few more seconds Let's read the data. Let's give it, a minute or two and let price action react, do its thing. And then we'll start talking about those scenarios and those trade ideas, see what zones where price action is reacting at. Let's see that volatility coming in. Seeing very strong move there on gold towards the downside. So let's just give it a second to load. All right, so let's go over this report. So we're seeing an NFP report higher than expected. So this is a very good report in terms of what was expected, because it goes from 85K to 172. So that's a good report. 4.3% is just within expectations. We can see that as a neutral report, but really that's still just showing that the labor market is still very much stable in the US, right? That's a good sign for the US. Average hourly earnings, 0.3%. That's a rise above the expectations. Also a positive, you can say. These earnings as well, 3.4%. This one came out slightly below the expectations. So a little bit of mixed report here from the earnings. One showing a slight increase, the other one showing a small decline right there. So nothing crazy in terms of with the earnings, but the important report that we're paying attention to here, more so the high impact report, that NFP report, 172K, that's a surprise to the market. That's expected, or sorry, it was expected, or the outcome right now that we're seeing in terms of the impact is basically what we were just talking about. In terms of a good report, we could expect for more dollar upside. We're seeing the dollar upside right now. And then gold, obviously you guys saw that breakout that it had towards the downside, right? So now with that report, now we have more of a clear bias because we now have a fundamental event that can support this, right? But let's prepare ourselves still for this report, or excuse me, for the trade ideas, because we still have to look at the technicals. Technicals still have to align with our ideas, right? So let's go ahead and once more, let's look at this 4-hour time frame. 4-hour time frame, we see that below the 4460s, like we were talking about yesterday, we could remain on more so a bearish price action, because we had, let me show you guys this on the whiteboard here. So that way we can just look at that very clearly, because I don't want you guys to get confused. And again, we saw the NFP report. It is, in my opinion, more bearish for gold, and especially since we're seeing such strong upside here on dollar. So we'll be on the lookout for that. We know what we're looking out for, and I'm going to point out those zones now. So obviously we have our zones of interest being these highs at the 44.75s, 44.60s as well. If we can remain below that area, we can also see further sells off of those zones. And then we have our continuation zone below these lows right here. So this is what I wanted to show you guys. So we had yesterday, to go back into the review and to connect it to what we're doing today, we were looking at price action to just do this review. We have this high as our last lower high point before we created these lows right here. You can see yesterday why we were adapting to more buys from a technical perspective, and because we were seeing some progress towards potentially maybe a peace deal or a ceasefire deal with the war in the Middle East. We started to get some optimism into the market. Gold started to recover. From a technical perspective, we had breakouts above our structure point on the 4-hour. Remember, this is gold on the 4-hour. And so above the 44.60s, it made sense to stay more on the bullish side. And we were also trading above these highs right here. So we were even more bullish, but that was above that area of interest. So that means that when price action yesterday did this pullback into this area, if we remained above that, we were going to stay intraday bullish because of the fact that we had shifted out of that structure. You see that shift right there? That's a shift out of structure. So that means if we stayed above that area, that structure point, that's more bullish. But what are we doing right now? We're trading back below that structure point. We're retesting lows once more. So that means for us as traders, and with new fundamental information, we would want to stay below the 44.60s to have stronger probability that price is going to get to those lows at the 44.40s. And then of course, once we get below that, taking it level by level, we have the 44.25s, and then even lower if we break those lows, as long as this report has strong impact. And again, how will we see that strong impact? With price action trading below 44.60s, and also not showing you strong signs of reversal at the 44.40s. Like, we don't want to see strong signs that buyers stepped in at this area, as we've seen, like for example, just right here, only looking at this area, right? But we've seen in the past, price action melts into that zone, goes into that zone, and then you have buyers step in, right? You've seen that. So the idea would be to just, obviously, as we break those lows, we could do it impulsively, so we have more volume in our favor, right? So again, below those 44.60s, we would remain bearish from a structure point, and also really seeing overall, like if we really analyze price action, look at the structure that you're seeing. Like, despite the minor breakouts out of the structure, when you look at the higher time frames, this is why it's important to look at the 4 hour, to look at the daily, especially the daily. Like right now, you look at the daily and you see that very much, it's very clearly bearish, as you're seeing lows, highs, new lows, new highs, new lows, new highs. So you know, if you play here, connect the dots, right? You have your low, you have your lower high, another low, lower high, lower low, lower high. So daily time frame, very much on the bearish side still. We have 4 hour, pretty much the same thing, right? It's just we have minor waves where we have to adapt to the buyers. But again, if we look at this structure overall, we have, let's follow it from here. Let's say we're looking at this high. Once we start to break below this low, which is where this high came from, we shift out of that bullish structure that was being created. So we have now here more bearish. We have now a low, we have a new lower high, lower low, lower high, lower low. You see how here we shifted out of that structure momentary. So we know, okay, above 44.60s, like I explained earlier, we could see signs of reversals if we stay above that, but we did not stay above that. We started to break below that, and overall, we're still following this more bearish momentum. What we need to see now is where we're approaching, which we've now reached those lows. So we know that this report that just came out is having strong impact. We have these lows that we're targeting, and we know we need to see continuations below those lows for us to see clean price action and clean sell opportunities below our areas of interest, right? We just got to be cautious as we reach that zone, right? So as we reach that zone, say we start to break out, let's see if that breakout holds and we have a 15-minute, a 30-minute, a 1 hour candle closing below your area of interest. So you have your multiple confirmations, right? We don't want to see price action reach this zone and then strong buyers come in and we see an aggressive bounce, because then at that time we're dealing with very strong volatility and not so much clean one-sided movement. We want to see clean one-sided momentum. That way we know the fundamentals are clearly having a strong impact on the market there. So like we're seeing right now, gold, we've reached that zone of interest. We had very aggressive breakouts of very aggressive attempts to retest that zone of interest, but you just had the continuations. Look at just how strong that volume is and how volatile the market can get. Like, these candles might look normal, they're like regular candles, but then you measure these candles, these are 50 pip candles. You have, like, the report itself, that candle alone moved over basically 200 pips. This candle that reached the lows here, like this candle itself right here, 90 pips, right? So these are things that you want to take note of, because during those economic data days, if you're using your regular risk, regular positions, and you get caught in these moves, you're either going to have to deal with that very sudden rush because you have very, very fast profit, or that fear that kicks in because your account goes directly into negative way more than you were anticipating. So be careful when it comes to those days of economic data. It's good to see this clean movement, right? Like right now we have the fundamentals very much impacting price action just how we want to see, right? Because we had a strong dollar, we had a weaker gold. It's going along with basically everything that we've talked about over the past couple of days, the comments that we said the beginning of this stream. But we don't want to get blinded by that. We don't want to just look at the market and think, oh wow, it's going in favor of what we were talking about. We talked about the labor market being more optimistic, more positive, right? A good labor market. And you see that, and you see that dollar is having that strong reaction. You see that gold is having that type of reaction. Be careful with letting your emotions taking advantage of that, you know, of that feeling of like, oh wow, I was right on the impact. The market is doing exactly what I thought, because then you reach areas of interest like we're doing right now, and you might get blinded to that. So you want to make sure you stay objective at these zones of interest, right? You want to make sure you see what's happened here in the past. Even though, for example, you've seen strong sell-offs into this area, price action still somehow has stopped there and has pushed back up. Today, the question is, will buyers be strong enough to push price back up as we're now seeing a strong fundamental event? That's the main question, right? That's why for me, I want the answer clear, simple, and easy, which is give me a breakout, give me a new low, and then I'm looking for continued retest and continuations with that fundamental event. If not, I'm not gonna look to force anything, because I know in the past off this area we have seen strong buyers. How do we know, or excuse me, what we want to be aware of or cautious of is if we're gonna see exhaustion. Again, that doesn't mean that necessarily your analysis is wrong, or that doesn't mean that fundamentals doesn't work, because right now we saw a strong report come out. So that means that gold has to break out. It doesn't mean that. What it could mean is that gold could have a short pause, a short breather, we can say, maybe retest of this area like we saw here, for example. You see price action reach the zone of interest. It fails to break, does a pullback. At this point, you pull back into an area of interest, which is this resistance and this area of rejection. And if I'm not mistaken, we literally traded this day, and we were looking out for rejections and continuations towards the downside following the bearish market structure, adapting to the current price action, seeing that price action was bearish, seeing that price action made a pullback, seeing that we were still rejecting an area of interest. We knew as long as we can continue to do that and candles continue to close in our favor, we have sellers still in control, and we have, or let's just say we have sellers or probabilities in our favor. We can look to continue taking sells, right? So we could see maybe a short pop-up and then that continuation later today. That's why we don't want to get extremely married to a technical or a fundamental bias. We want to simply have the bias, but then just simply be prepared, have that preparation for whatever happens. Whether price breakouts, you're prepared for that. If price gets here and bounces, you're prepared for that. After the bounce, if it reaches an area of interest, you're prepared for that, right? Like you're just simply prepared for scenarios, already knowing what you should do, how you should react to that. And the other thing that's interesting to see is that dollar is reaching an area of interest right now. Same time that gold is reaching an area of interest, right? So we could see a breather on both, maybe a little bit of a short pause and then the continuation, right? Like a lot of times when we see breakouts, we see moments of like loss in momentum. Like you see a strong breakout here, loss in momentum, but then you continue, right? With time, the market takes its time. Same thing we could see today. We could see price action get here, pause for a little. We would want to stay above that area to see that continuation, similar to what we wanted to see here. We wanted to stay above this zone. It paused for a little, but we know we got to stay above this zone to have more signs that dollar is still strong. We didn't get that. Price action just closed below your area, pulled back to a previous area of support. The reason we're seeing this strong bounce today was because of the NFP report. Okay, makes sense. Now we're reaching a new area of resistance. We need to break above that to see that strong momentum, right? It's Friday. We could see strong moves, very strong NFP report. Again, we now have those things to look out for. Yeah, we could see some very interesting price action for NYSE open. But speaking of NYSE, let's go ahead and do some US 30 analysis so that way we have that prepared. So just doing a quick top-down analysis review with US 30. We remain bullish as price action on the daily time frame. We continue to make new highs. We're pretty much in all-time highs territory. We have 4-hour time frame also very much just creating new highs for us, new areas of resistance that we can mark off. And we know we have our areas of interest where we have to trade above. We have on the 1 hour as well, we had that area confirmed as a resistance. We have now new support being created for us on the 1 hour. We have this area right here of support as well. This is on the 1 hour. This is the 51,500s is our area of support on the 1 hour. And then we have 51,600s, or 610s as our area of resistance and our new area of support that's being created. So we'll keep it simple with US 30, continue to stay bullish as long as price action can remain for one above this area of interest. In case we see some pullbacks during NYSE, I'd want to see price action pause here, give us some sort of rejection plays. Overall, I don't see why US 30 can't continue bullish with this structure. Really only looking to adapt if we see breakouts below this area, as we have at that point a ton of room for correction. What I am thinking is the only reason why we could see corrections, and I would call it below this zone, is first of all, it's a clean or a clear technical zone to look out for. Easily below those lows, we know we could see more signs or more probabilities of seeing pullbacks, right, from a technical perspective. From a fundamental perspective right now, we're seeing escalations still, with all the talks of the peace talks and this and that, there's still escalations in the Middle East. So in my opinion, that's still something that can negatively impact indices, but we'd want to confirm that from a technical perspective, and we'd see that below 51,500s without trying to be heroes and call tops and say that US 30 is going to sell off from the highs. I don't want to do that. I'd rather just follow price action, react to what it shows us, and take it for what it is, right? Same thing what we do with gold. Let's do some USD JPY analysis here. So UJ, also some quick top-down analysis review. We have bullish price action on the daily time frame. We know fundamentally dollar is still very much strong, or stronger, or much stronger than the Japanese yen, excuse me. We've seen the Japanese yen trading at all-time lows, while dollar is very much trading near previous highs. Like if we look at these on this daily time frame, we're at these highs right here, right? So we can see that correlation there in terms of strength on one pair, the dollar, and weakness on the other, which is the Japanese yen. So we have a very clear bias from a fundamental and a technical perspective. We've been talking about UJ buys since last week. We've been bullish on UJ since we started breaking. We started our breakdowns on UJ just literally around this area. 159,600 was our area of interest from an intraday perspective until we got the breakouts above that, and then your new lows that got created here. So yesterday's zone of interest was this area, which, as we can see, we did not reach. Price action still has not given any sort of pullbacks there, and the continuations above our zones, not that strong, right? So we'll adjust some of these zones. Like what I want to do is I want to mark off these highs and these lows, and then adjust that on the 1 hour. Yeah, just basically, I'm gonna mark that off just like that. Basically where these candle bodies are closing, and where we've seen in the past previous candle body closures, wick rejections off of this area as well. And so again, from a technical perspective, even on the intraday timeframes and these lower timeframes, we're still very much bullish on these pairs. USD JPY, bullish on US 30. Gold is the one that we're adapting to more bears. We just know we've already seen that strong push off of the economic data. So that was very aggressive. We want to see if we're going to get any sort of continuations, or if we're going to have to adapt to some short-term pullbacks and be more patient and let those trades come to us there. But yeah, as long as that dollar continues to strengthen, which we're seeing right now, still more strength in the dollar, we could even move this zone a little bit higher, right? Just around here, candle bodies, wick rejections, right? We see that that's a clear zone. But all right, guys. I don't trade NAS KDS. I've never really traded NAS. I did so, that was one of the first indices that I traded, but I stuck more with SPX and US 30. And now more so I've been getting into US 30. But still, the volatility is something that's very interesting to adapt to. Just because, like, at least for me personally, the style of which the way that I see the US 30 behave for my style of trading, I haven't really been able to find a strong edge with it. You know, it seems like I have to adapt to what the asset class is. And so I've really been taking my time with that because, you know, I got a good relationship with gold, you know. I want to stay loyal with gold. But all right, gold is approaching those lows. We're breaking lower right now. It looks like we have strong momentum. Let's look at that on the lower time frames. Lower time frame structure wise, what do we see? The breakout, we have a minor lower high that gets created, very strong push, another minor lower high. So we see very clearly just who is in control, which is look at the moves down in comparison to the moves up. Very, very clearly, we still have sellers in control as we continue to see dollar strength. We continue to see the fundamentals impact the markets here. So just pay attention to that. We have about 8 minutes until this 4-hour candle closes. It's going to be crucial, very important for this 4-hour candle to close below the area of interest. I'm honestly debating moving this zone to these lows. Let me see that. Yeah, I'm moving that zone right there, guys. Those lows at the 44.30s, that's the area that we're gonna pay attention to for further breakouts there. Because that other zone that we were just looking at was this zone, but I want to pay attention to the main lows, right? So we've gotten the move below this zone of interest to 44.40s, right? That's a clean breakout move right there. Now what we want to see really is a clean candle closure below this area. Right now we're seeing very strong sellers, very strong sellers. Who took some trades off of that? Some breakout trades right here. We're seeing very strong momentum on all time frames. Not bad for an NFP day. Compare this to those NFP days that you sat around and had no understanding of what NFP was, all right? And I say that from personal experience. Those NFP days, or really CPI days, FOMCs, those were crazy days when I didn't have too much understanding of these markets, or in terms of like the fundamentals and stuff like that. But now with just a little bit of extra knowledge, more awareness, we look at the markets on a day like today and we see just how well sometimes, and for the most part, I would say a very, very high amount of times, I would say, good amount of times we've seen fundamentals have that strong driving force in price action. So right now we're seeing a good example of that. If we can continue to see those lows. Good morning, good morning. Took sells off of the 44.66s. So off of these over here, Very, very good move right there. But nice. Those are some nice trades. We have about another 5 minutes until we get that 4-hour candle closing here. If we get those clean moves, we don't have to sit and try and force trades later on. If we can call it a stream shorter, on a day like NFP, that's good, because again, on those days, you can see such strong moves that, you know, you can get caught over trading and things like that. So you want to make sure, if you are able to take advantage of moves today, get some profit out of the markets, you know, call it a day, and then just move on with your week. Especially if you had a good week already, let's try our best not to give back profits to the market. But all right, well, this is what we wanted to see. Very strong sellers right here coming in control. We have very strong buyers as well on the dollar. So we're seeing just how strong the impact today is. Let's look at US 30 right here. US 30 having a bit of a pullback below the area of interest. We know this would be that overall zone that, as long as we stay above, we can still very much be bullish on all time frames. But a break below that would be a break of structure on the 1 hour, because you see this is the lower, or excuse me, the higher low, because this is bullish structure. So this is a high, a higher low, a new high, meaning if we break below that higher low point, that structure is shifting on those intraday time frames. Same thing on this 4 hour. That's our higher low before we created this new high. Even if it's this high right here, this candle closure is still above this high, so it is a new higher high. Again, breaks below that would be a shift out of that structure. So that's what we want to be cautious of, below the 51,500s. Damn, what's up with that? All right, let me see. While we wait for this, let's wait 2 minutes for this to close. At this point, if you took trades either off of the earlier lows that we had listed from the 4440s, around those lows, or if you took breakouts below these lows right here, for scalpers, these are insane moves, right? So make sure you guys are securing your profits, managing your risk correctly. Let's try to avoid that greediness. Let's try to avoid FOMOing into trades. You know, if you wanted to take sells off of the break of lows and you didn't, and you see that price action now is at these lows, be careful trying to chase the market, thinking you missed the trade and now you're going to chase the market because price action you think is going to go all the way down. Despite what it does, whether it goes all the way down or not, your job was to take the breakout at this low, or at this low that we had marked off earlier, right on the 1 hour. If you could not do that, then again, don't try and chase the market after. Elijah, what's up, my friend? Yeah, I'm gonna just sit on my hands today. Had a good week, and I'm okay just watching price action. Clever man. Tough to do as well on a day like NFP. Days like NFP where you have such good opportunities. These are those initial moves we're getting off of the economic data, right? Very clean right now. We're seeing very clean breakouts on those lower time frames. You didn't even get a retest on this breakout. You just got the breakout, and right now price action is still just pushing. If we look at dollar, oh, sorry about that. Dollar is pumping as well, same time, right? So we're seeing that correlation. Now at this point, what we would have to wait in terms of selling opportunities, you'd have to wait for the exhaustion, the pullbacks. After the pullbacks, you then need exhaustion on the buyer side, and you need sellers to step in, right? And in terms of optimal price conditions, you would get rejections off of those 4430s, and then you have your continuations and your lows that you can target, right? Connie, good morning. I'm learning when to enter the trades based on your analysis. Thank you. Well, yeah, I hope I can give some good insights there. For the most part, like we've seen, it's not bad. All right, so 4-hour candle has closed here. Let's look at the 4-hour candles across the board here. So we have a very strong candle closure here on the 4-hour. Your breakouts below the lows, very strong candle closure. At this point, we could expect for price action to maybe give us a bit of a retracement. It would be a beautiful retracement, almost like a 50% correction, like we see can happen a lot of times, right? Like you have this example where you have a strong breakout, strong candle closure, about a 50% correction of that move, a retest of an area of interest, and then you have your continuations. That's what we'd want to see today in terms of sells, because other than that, then you just have breakouts and continuations, which is hard to trade, right? Because you don't know when price action is going to stop. So you don't want to catch yourself selling too low or buying too high. So the ideal scenario would be wait for price to give you that low, which is what it did, gave us that candle closure. We have our area of interest. At this point, we want to see the correction, the exhaustion, the rejections, and then continuations back into these lows, and then your further continuations below that into this area of interest right here, 4375s, right? Damn AD, those are always tough. We'll see if you can get some more opportunities. Right now with this 4-hour candle closing like this, looks like a very clean candle closure. We have dollar as well, very, very strong close in terms of like how the hourly candle's closing. Pay attention to the fact that you're breaking above this area of interest. I like the fact that price action is from these lows going basically and creating highs, higher lows, highs, lows, higher highs, respecting these higher low points, now creating or attempting to create new higher highs. So the strength in dollar is what we want to see, right? For our bias to continue being in our favor. And we'll see gold. 1-hour candle close as well. On the 1-hour, that would be a clean correction as well. And then for those continuations to happen below that area there. Let me see. I want to know how many trades you guys took this week. How many trades did you guys take? What trades did you guys take? Was it based off of the analysis that we had? Remember that you can always do reviews of the sessions as well. So if you're ever like reviewing your trades, reviewing your analysis and all of those things, you now have basically a place on YouTube that you can go to any date since we started our live streams, and you have that entire New York session recorded. And a lot of times on these lower time frames, which gives you more in-depth information there. So take advantage of that if you're doing those sort of deep dives in price action, or even if you just want to study one day. It doesn't have to be that you study every single video, but you can just study specific days that you're wondering maybe what you did wrong, what you did right. You can always just go back. The other thing is, if you go onto the GatesFX YouTube, you're gonna see that we've created a playlist that are basically the highlights that we're getting, some of like the best highlights that we get from our live streams. So I'll try to point out like the days that we have really good analysis, days like today where we talked about NFP coming out potentially stronger, what that reaction could be, right? The dollar strength. If there is dollar strength and we have that reaction, how do we adapt to that on gold, right? And so those type of things are good to, in my opinion, to take note of, because it's like now you can go to a playlist, right? And you have somewhere that you can see real live examples of that specific topic, right? Like pre-recorded videos are good, of course, but live examples are a lot different because you're seeing it live. You're seeing it happen right there. So you understand the behaviors of the actual information, right? Because it's one thing to talk about support and resistance or fundamentals or this and that during a pre-recorded video, right? And you talk about definitions and this and that, like that is, in my opinion, easy to do. But to do it live and to show examples and to be able to adapt and not have to involve ego into the analysis to try and prove that you're right or wrong, to try and prove that your strategy works, right? No, it's more so an objective point of view, objective perspective with the market, using data and using analysis, you know, like clear analytical points, you know, clear fundamental subjects and topics, or clear or easy to understand price action, the technical concepts, right? So you always can just go back and study those things. Ideally, in the near future as well, I would want to create like pre-recorded videos of just more like informational videos. More talks about gold, more talks about central banks, right? Those sort of topics that it's hard to come by on the internet, in my opinion, at times. But all right, gold so far only giving us a very, like the thing about gold right now is that for us to be expecting a pullback into the 4430s could be a little bit of a stretch based off of what we're seeing right now. Because we're asking for a pretty deep pullback into an area of interest at the time that price action is not really doing deep pullbacks. Not saying that we can't do the pullback, but if we study the current momentum of the price action, let's say after the NFP report and the market impact that we're seeing from there, we had impulsive moves, short pullbacks, impulsive moves, weak pullbacks. Maybe this one wasn't that short, but still was pretty weak in comparison to the impulsive move. This move went even lower. So for us to expect, like, look at the size of this pullback, look at the size of this pullback, look at the size of the current pullback we're getting. That's what I'm saying. It's a little bit of a stretch for us to call a pullback all the way into this area of interest. Not saying that we can't, but how we're seeing price action develop right now, that would be considered a pretty deep pullback. So if we're gonna prepare for that, let's mark this off objectively. We have a new high that just got created. So that right now is a lower high point, okay? Well, this is our low point down here. So if we're gonna continue to see further momentum and further pushes following price action from an optimal point of view, we need to see rejections of this lower high point to continue what it's doing right now, which is just, right? That's what you'd want to see in terms of optimal price action. Against that price action would be a breakout above here, means that momentum is dying off on the seller side, because now you're starting to create, or excuse me, now you're starting to have failure to break out or create new lows, and you're actually now starting to break out above higher, or excuse me, above lower high points on the lower time frame, meaning momentum is dying. And at that point, that's where we could have those expectations, or those assumptions, we can call it, that price action can do pullbacks at this point. Ideally to our area of interest, for us to have ideal scenarios, easy breaks and retest off of key areas. But by analyzing price action objectively, all the way up here on the lower time frame really is that point where this low came from. So unless we create a new low and this becomes our new point of interest, then we don't have to worry about that. But right now, the fact that price action off of these lows, you analyze where that came from and you see that it came from here, that means that price action can do a pullback even as far as up here, reject, and still continue bearish, okay? So that now adds up to the idea that if we get to this zone and we don't see clear exhaustion, like a clear price action, let's say getting there and seeing engulfing bearish candles, seeing large wicks, seeing other time frames and other candles closing below that zone, right? If we get that, then again, that's the ideal scenario for continued sells off of this zone. If we get closures and candles above that zone, then again, don't force that. Wait for price action to give you the pullbacks that you want to see. And if you get ideal scenarios, ideal conditions, you're gonna get continued rejections off of this area. Even at this point, I don't wanna make it confusing for you guys, but even the 4460s, which is the main intraday zone, even that zone is still an area of interest where if price action pulls back all the way up there and rejects, we'd still continue bearish. I'm just preparing ourselves, or preparing you guys in case you start to get signs of pullbacks against the overall structure. So that way we're not forcing into any trades. So once you have these levels and these things marked off, you should be able to understand and pick and choose where you would want to enter the market. Whether for you, that means I want to wait for price action to get to this zone, exhaust, and give me rejections there. And there I'm going to take my trade. Whether you want to wait for price action to pull back here, that's a decision that everybody has to make on their own. Whether you want to wait for price action to reject here and then maybe break these lows and you want to enter at the breakout of these lows, that's on you. If you're waiting for price action to reject these highs and break out these lows, again, that's on you. I'm just preparing ourselves for the possible scenarios objectively based off of price action. So again, if we look at that on the 1 hour, a pullback into those 4460s isn't anything crazy. It's still very much following the overall structure that price action is on. Like you could still see something like that. It wouldn't be ideal because you'd have very deep pullbacks, right? And again, that's not ideal with the current momentum and the current price action that we're seeing. That's why we'd want to see only pullbacks either here or maybe here. At that point, I would still wait for something like that. Like I'd wait for price action to pull back above my area of interest. Like if I don't get the exhaustion at the 4430s, pull back above that area, but then reach and reclaim those lows and stay below the area of interest. So then I'm looking to take trades once you're trading back below that area for a potential retest of those lows. And at that point, maybe even lower. That would be the ideal scenario, right? But we know what we need to have. The rejections, we need to have, let's see how dollar is performing right now. A little bit of pushback off of these highs, but still very much behaving in favor of that. Let's go back to those lower time frames. So that way we can catch up and really analyze that momentum. I would say that especially on these days where you have economic data, those days with economic data, you have very strong price action. So the lower time frames can become more important at those times because the market at that point is now waiting for 30 minutes or 1 hour candles to close. Like you're getting your decision points off of the 15, the 5, and things like that. So it just becomes, you have to adapt. Basically what I'm trying to say is you have to adapt to the volatility. AD, let me see your question. So when the NFP favors USD, GBP and Euro drop against every pair. Wow, this is dope. I got in super late, but I'm still in profit paper trading though. Oh, shit. Let's see that. Because remember, we're talking about dollar strength. That's why for UJ, our analysis or our bias for the day still very much remains bullish. Damn, this 1 hour candle right here. This was probably an intervention right here. We probably saw a spike up. Yeah, look at the same thing. That was probably, this is something that you don't see on the news, by the way. But if you come back next week, or maybe even later today, you're gonna see that this was most likely a currency intervention on USD JPY. Because you're seeing a spike up, so that's a prop up in this price to prevent it from from falling. It's basically them trying to prop up their currency against such a strong dollar. So USD JPY had a deep sell-off. This is a 1 minute candle, guys. And look at where that 1 minute candle went to. An area of interest reacted off of that, and then it's now continuing to push. So USD/JPY had that sudden surge of volatility. Yesterday we talked about that as well, that this 160 price point is considered a very strong area where you have currency intervention, which I mentioned yesterday to you guys, which is basically a prop up of the Japanese yen, this currency. And it's to prevent it from just having a sell-off, basically, right? To stop that sell-off that was maybe coming in as we had that strong dollar. And that's something that's happened many times before in the past. That's something that's worth, honestly, a whole topic of. Like, that's something that I can create a YouTube video of, because there was a time where currency interventions were very impactful for the markets, and it literally stopped the US dollar rally, literally. And again, we'll talk about that during a different time. That's a crazy subject. Sorry, I got distracted. So your question was, so when NFP favors USD, GBP, Euro drop against every pair? Oh, right, that's where I was going. I apologize. So yeah, same thing with the USD, JPY. Dollar strength, so that's why we had that strength in the USD, JPY, despite that intervention that we just saw there. But then look at Euro, USD as well, right? A stronger US dollar against, you have a weaker Euro, you have this right here, right? You have that scenario. GBP, USD, same thing, right? USD CAD has some strength, right? Because it's USD first. So yeah, that's those things that we talk about, those market correlations. That's based off of what we saw there with the dollar strength. We know that impact came. If you analyze that, and you have, when people are skeptical of fundamentals, show them that. Go to the dollar, and you can go to as precise as to the 1 minute, and you can see literally where that spike came from. And ask yourself, is that from a hidden strategy or an engulfing candle, or is that from economic data, right? On a day like today where it was very optimal, very much respecting that information, and you see a stronger dollar at 830. You go to gold at 830 and you have weakness, right? Literally vice versa. Go and do the same thing on Euro USD on the 1 minute. At 8:30 on the dot, that's where you have your move down. That's the same information, same market. GBP USD, same exact thing. 8:30, that's the move down. That's the strength that came in for the US dollar at that time. USD CAD had a bit of a mixed reaction, but overall, still continued to push towards the upside there. USD JPY, let's see, this was 8:30 right here. USD JPY, a push towards the upside following US dollar strength. Again, this is something right here, completely out of your guys' control, out of everybody's control. This is literally in plain sight market manipulation. This is, when people talk about market manipulation, currency interventions are that. Like, literally. Hopefully I don't get canceled for that. But no, seriously, look up, I want to look it up myself. Japanese yen intervention. So if you look up the Japanese yen intervention, one of the first stories that you'll see pop up, I wish I could show you guys this, is that, let's see, Japan warns as traders push yen to 160 intervention zone. It's something that we've seen already take place here in the past. We saw it here, this was an intervention, this was an intervention, same thing today, an intervention. And it's at the same time that the Japanese yen is nearing lows, right? To prevent it from having a deep sell-off and such a strong weakening of a currency. So it's their way of protecting themselves against that downside momentum there. You can look that up, literally. I don't want to, like I said, I don't want to dive too deep into that topic and then we completely forget about what we're even doing here, talking about price action. But those spikes right here that you see, those are interventions, currency interventions. And again, you can look that up to have that proof for yourself. Let me see, AD, I get it now. Oh, and good morning, Marcia. I get it now. My initial technicals was correct, but it started to look like it was going against me. But when news dropped, it smacked GBP down hard. Yeah, that's the thing about being involved in trades during those events. That's why before we did our analysis, I was trying my best not to push a focus or a narrative or a bias onto you guys, because I know that could have easily, like, say we were at the beginning of the stream more bullish, which I was, above the 4460s. I saved myself that idea because I thought if we see that from a technical perspective, gold is above the 4460s, that's clean, that's fair, right? We've seen pushes above that area of interest. If we continue to stay above, we've seen buyers step in off of that zone. We saw it here, we saw it here, we saw it here, right? We've seen it in the past. That's fair. But if I see a strong NFP report and I see a strong labor market, most likely, very high chance, very strong odds that we are gonna break those lows and that bias is gonna get invalidated. Now I'm gonna have to explain and adapt to that. You get what I'm saying? So it was more so like, let's just wait. Let's see what happens. We reacted, we saw the reactions, and we were objective with that. And we understood our areas of interest. This one was a very impulsive one today. Then the next one was the 4440s. Then the next one was this one, right? So we took it step by step, which is, in my opinion, a very clean approach, especially trading on such difficult days like NFP. Think of what NFP days are known for, you know? NFP Fridays, everybody's over leveraging, gambling, buy stop, sell stop at these areas. And it's like wherever the market goes, they're trying to be involved by putting a buy stop or a sell stop, which I think is super dangerous because you're probably just gonna get taken out by spread, regardless of where it goes. So I'm not sure if you guys knew that, but spread does spike during those high volatile events. For the most part, yeah. Because think about it from the point of view that I was talking about yesterday. Yesterday I gave you guys yesterday I gave you guys the main topics that you want to be familiar with when it comes to trading like these currencies and forex pairs and things like that. Us that we're looking mostly at like US dollar, we want to stay aware of what's impacting the US dollar. So I wrote out for you guys that it was, for one, we have economic data. Let's just write it out so people can take note of this. We have economic data, we have central banks, we have geopolitics, and we have market sentiment, right? Like we can, like, yes, there's other things that have an impact when it comes to fundamentals, but these are like those main ones. Like when it comes to just becoming familiar with the subject, if you can become familiar with these subjects here, then you're gonna have an understanding of what the current market narrative is, right? And you'll understand how to tie each specific bit of information to one another to where it gives you that understanding of where price can go today, right? So I don't know if you guys want me to get into that rant. I can, if you guys want me or need me to. But yeah, it ties in very well. It ties in very well. I can explain to you guys how today we were able to analyze that, how it all ties in to the same market narrative that we're talking about. So that way you guys can see that explanation, or like how to follow along and how to tie all that information together into one. It'll give you like answers that with that answer you'll understand, okay, what are the probabilities of that having the impact on the market, and what would that do to the market? Would it make it go up or down? That's what we want to know at the end of the day, right? like I always tell you guys, it's the combination of this right here and how that aligns to the technicals, right? Those are main four. Yeah, for the most part. Like, you have other things that impact the market, of course, you know, like fundamentals wise. Like if you're looking at indices or stocks and things like that, like you want to pay attention to this, but you're also paying attention to like earnings reports and things like that. And we're talking about things outside of price action, right? Because price action is one thing, one concept. That's literally the study of price through the chart and these candlesticks. But this is where you go deep into the rabbit hole of gold. Well, you know what? I will talk about that. I'm not even going to give you guys the choice. I will talk about that. I will explain that. And you guys can take notes if you feel like it. But we'll do that after NYSE open. We'll wait to see how these 30-minute candles are closing. It looks like this 30-minute candle on US 30 is closing still pretty bearish, pretty weak. We could see possible some pullbacks into our area of interest here at market open. Excuse me. Let me see, AD. I never traded NFP. Was reading a trading book while I was locked up. Took a lot of notes, but nothing compares to live webinars and live markets. Yeah, exactly. Exactly. The knowledge is one thing, but until you're able to take it and really use that live, that's the difference right there. You know? And also it becomes a different thing once you get into that live market, right? Because demo is another thing as well, where you can be very confident, very easy to read. You have no risk, you have no pressure. But the moment real money gets involved, that pressure really sets in, and now all of a sudden you're in a trade and you see your money going negative, and it can be an uncomfortable feeling. And same thing with wins. You see your money start to go in green, and it just takes over your greed. You know, the greed takes over. The fantasies take over, and a simple day where you could have just taken profit, you know, closed down for the day, moved on with your day, journaled, you know, enjoyed the process, respected the process, you know, wrote it down, and, you know, came back another day to try and attack the markets the same. You decide, no, I'm going to be, today's going to be the day where I'm going to flip my account. Today is going to be the day where my life changes. And we get on these highs, which, again, I speak from experience. I've gotten on those highs where I'm just like in so much profit and the price is going so much in my favor that I just become so greedy. And instead of taking 100% of the profit that that I wanted, I take 50%. You know, I take a quarter of what I could have had because of greed. You know, because I let the market just take advantage of my own emotions. And it's just human nature. You know, no need to feel bad about it. It's human nature. What you want to do is be aware of those things. You know, and just know, especially when you guys are joining these lives. And again, I'm not entirely sure how your approach was to trading, but at least for me, the approach that I have with trading is a very continuous approach. It's very much following like a story with the technicals and the fundamentals. So if you're doing that every day, that also teaches you patience, because you know every day is just part of the process. It doesn't have to be something special. It doesn't have to be like, today is the day where I do this. Today is the day where I finally become profitable. Because you really never reach those days. Like you never, at least from my own experience, I've never really had like those aha days where I'm just like, oh wow, today is that day that everything changed. It was more so a compounded days of doing things correctly, where then you look back into your weeks or into your months' progress and you're like, damn, I've been doing things good. I've been doing things correctly. My progress shows that. You know, my results show that. And you remain on that composed mindset, that patient mindset, and take trading day by day patiently. Things become a lot easier. You'd be surprised. All right, US 30, let's see. This is why you wait for candles to close. We looked at US 30 earlier and we thought, okay, that was bearish. If you're closing below that, we have stronger probabilities of sell-offs. But right now you're still seeing, let's see you in the next 30 seconds. See that volatility kick in. Consistency, exactly. And these live webinars will help you become more consistent because you're showing up and you're forced to follow a process. You're never going to show up to these sessions and we're going to be here gambling or just eating shit, you know, like, of course we can chop it up. We can talk about other things, you know, outside of trading, have fun. You know, we're a community at the end of the day, but we also want to make sure we're focused, you know? So speaking of focus, we have market open here. NYSE, let's look at this on the lower time frames because right now, although we got candle closures above our zone of interest, in terms of candle closures, when it comes to US 30, a lot of times these candle closures and breakouts will have very strong impact. You know, like those breakouts are super strong on US 30. So just be aware of that initial volatility. Like I've heard before with people that have a lot of experience trading during these NYSE hours. Most experienced traders that I've seen are patient. You know, they wait for those initial 5 minutes, 10, 15 minutes. So if that means stay patient, then do that. If that means take advantage of the initial volatility, then do that. But again, remain consistent with your approach. That's what's important. So again, right now, momentum wise, if we get breakouts of these lows, I'm thinking that's going to be an easy sweep to the downside on US 30. If now we have these highs, but that's just now reaching into new all-time highs, you would have to be careful in terms of like where you're going to look to take your profits, because at that point, once you're breaking out of these highs once again, the 51,675s, you're then on the rise to all-time highs, and at that point you don't know where price can stop. So if you do start to break out of these highs as you're trading above your area of interest, you're still continuing to respect that bullish market structure and you have bullish momentum above these highs, then I think buys are very probable above that area. Right now we're having the momentum pushing towards these lows. Like we've talked about, you know, during that market open, markets can be very, very volatile on these indices. So this is most likely happening across the board. Like look at SPX, a gap down. Nas is doing a very strong push up, right? So you're seeing the market reactions across the board. But all right, let's see if we can reach 51,500s and reject that area and continue bullish. If not, don't fight the sells below the lows, below this breakout zone of the 51,480s on US 30. For gold, we know what we're waiting for. We just haven't gotten it yet. It just looks like price action gave us a new low. So that makes this area now even more important because it's now the lower high point, the last lower high point where we created these lows from. So we have these lows that got created, that came from here. That means that we ideally reject this area, stay below that area to continue with this momentum that we're on. Once we start to break above that zone, you really have to be patient to see where price action is actually going to stop. All right. But all right, guys. Oh, and before I forget, USD JPY. UJ trading now once again back above into the 160s here now, and still very much in buyer bias, but you're at that area where you have seen very strong sell-offs. Let's not even get complicated and talk about the interventions itself, but you've seen very strong sell-offs off of this zone. So just be cautious of the fact that if you're in buys, you're in buys at highs. So ideally you wanted to be in buys off of 159.850s, which was this area of interest right here. Again, today, very volatile. It was a very aggressive move. But talking about it more from a swinger's perspective, these are those areas where price action was very optimal in the previous days that we've been trading, which are these lows or above these highs right here. Respective of these highs, right? The breakouts below are very short-lived, but the moves above, you see those continuations. So USD JPY very much remains on that bias as well. Let's see dollar. Yeah, dollars ended up spiking back towards the upside there. Very thirsty this morning. So guys, in terms of questions, has everybody pretty much understood everything that we've done today in terms of price action, in terms of the fundamentals as well, what we're following, why price did what it is, what it's doing, why we followed through with those ideas? I want to know also if anybody else, I saw a few people were able to take some sells, but I would like to know specifically who took those sells, from where, to see what type of trades that you guys take. I know some people even had sells off of these highs right here, which played out very well. I saw someone else talking about sells off of the 40s, which was also very clean, very aggressive, but it was clean. On a day like today where you could expect those aggressive moves, that was a very clean trade right there. And then those continuations, of course, I'm not sure if anybody took those. I haven't seen anybody talk about the breakout below the 44.30s on gold. The retest obviously didn't really happen, as you can see. But pretty much today has just been a very good day for breakout traders so far. For breakout traders, people that follow their rules and they wait for those optimal conditions, on a day like today, you were able to win big. Where on other days where you see price action maybe a little bit slower, those were those days that you can maybe sit out, be more patient, wait for better breakout opportunities to come. So that way on days like today, you're able to take advantage because you know you're not trying to just recover losses, or you're just like mentally recovering from losses, which is also bad. So excuse me. So now guys, let me ask you a question. Other than the trades, if anybody would like to share, I would appreciate that, to see some more trades. What I wanted to ask though, is in terms of the economic data from today, do you understand how that ties into central banks? From the economic data that you saw today. Let me know if you understood that question. Like, how does the NFP report have an impact on what the central bank is going to do? And therefore, what did that result for today? Like, can you get to that conclusion? I would like to know. And let me know if you want me to ask the question once more, as we see gold melting in our favor, with hopefully some of you guys able to take advantage of that move right there. That's for today, below this breakout to these lows, that's 300 pips. Today's overall movement has been almost 700 pips on gold. Below this breakout so far, 400 pips worth of movement right there on gold today, following the economic data release. Without overcomplicating, do you see just how well having fundamental awareness can be for your trading journey? Seeing that type of impact that comes from that. I'm gonna explain this to you guys in just a second, because it's things that are worth understanding. It's things that I'm understanding more, but wasn't sure where to enter. That's what these zones would be for. If you're unsure of where to enter, when we put out these zones, it's those are the optimal areas where you're looking for trades. So that's where you as a trader have to pick and choose that, whether you're entering at the breakout, whether you're waiting for more confirmations. Today, like I was explaining, was more so the day where breakout traders had very good results, because you had very clean breakouts with price action not even retesting their area of interest. So they were able to take easy profit on this breakout today. AD, GBP, JPY took a late sell. Yes, I comprehend fully now. Fundamentals are still confusing, but very important to the... I'm about to be a... It's not that confusing, in my opinion. I would like to know what you find confusing about it, so that way I can help clear that up. Connie, yeah, that's 100% true. You also want to make sure you have your own analysis and your own ideas, so that way you can validate our ideas with yours. And I know some people would like to use that as more confluence, because what we do is very precise most days. But the question that I was asking you guys about today, because remember, all of these things, they're part of the narrative. So your constant question with fundamentals, and this is me trying to explain it to you, so that way you don't get confused. Remember, this is just like adding onto a basket, and the baskets are bullish or bearish. So you're constantly asking yourself, which basket is this information falling into? So if you know what basket that information is falling into, then you have the idea of where price can go. Because you're gonna know, obviously, one basket has to overweigh the other for price to move one way or the other, right? Buyers have to be stronger than the sellers for price to move up, right? It's a basket, and it goes up and down, right? During one time it's more bullish, other times it's going to be more bearish. So when you're looking at these events, and pay attention to this, I'm going to try and say this slowly, because this is a key point, key piece of information that you want to understand, so that way you can be less confused with these things. Because again, I don't want you guys to think that every little piece of information is like something completely new that you have to like overanalyze it. No, it's more so, again, how does this add on to the narrative that we're following? Remember the narrative that we're following right now. Right now, the narrative, the main narrative is inflation, right? The war in the Middle East, the impact that the war in the Middle East has had on inflation in the US, and how the central bank has been reacting to that, right? So that right there, that right there, we know, okay, the main narrative is coming from the geopolitics being, okay, war in the Middle East, how the central banks are reacting to that, and how they're reacting to that based off the economic data. So the economic data being inflation being higher than expected, right? So pay attention to this. On a day like today, where we have the main narrative being inflation, right? That means that the labor market report is not as important as the CPI report, right? As those inflation reports. But it still adds on to the narrative because central banks are still looking at how strong the labor market is. So ask yourself this question, right? I'm trying to make this as logical as possible so that way you can follow the market narrative. If you now know, okay, inflation has been rising due to those price shocks in energy. Inflation has been rising. The central bank's reaction to that, or the Federal Reserve's reaction to that, has been more hawkish, right? We've seen a lot of Fed governors, right, from the Federal Reserve turn a lot more hawkish. They turned their attention and their focus on the inflation and the fact that they now have to maybe raise interest rates. That means that today, when you have the labor market force being released, you would ask yourself that question again: how does the labor market data from today tie into that central bank narrative, which is what we're paying attention to? Meaning, if we see a strong labor market report, that's very optimistic, that's good for an economy. If anything, that's going to add to those inflation pressures, right? Because when you have a healthy economy, that means that there's growth. But when there's too much growth, then that's when you're going to see inflation arise. So that right there ties in perfectly to what we're talking about in the overall narrative, which means, okay, well, if we see that the labor market is still strong, still active, we still could see that the labor market force is still active, meaning that people's wages are still healthy, people are still spending. That puts pressure on the Fed because inflation is a problem right now. So the basic definition for that is, if we see a strong labor market report, that is most likely going to keep the Fed still more hawkish, right? More hawkish means dollar bullish. That's where we translate that into dollar bulls and gold weakness. And then you have the result of today, which was dollar bulls, gold weakness. But again, it's part of that same narrative, right? It's part of the same information. The narrative would have switched if it would have been vice versa, right? Like, look how interesting this could have been. It's the same question. It's, okay, how does the economic data today tie into what the Fed is focused on right now, which is high inflation, right? Which is potentially raising rates. in the near future, how they can raise rates is by seeing that the employment levels are still very healthy. If employment levels are healthy, that means that the economy, that means central banks could afford, let's say, to raise interest rates, right? Because they see that right now, with the current rates, they see that employment levels are good. If anything, there's too much inflation. They now have to be more hawkish. They have to raise rates. That's why we're seeing, again, that dollar bullish. But if we saw that the labor market was weakening, we saw that the NFP was very bad. Like imagine today we saw a very weak NFP report. Let's say we saw a rise in unemployment. Let's say we saw a decrease in the earnings. That would have been a bad report. How does that tie into what the Fed can do? When you see that the labor market is weak, and again, you understand this by studying the past, the central bank, to help the economy, so think about an economy that has the labor market weakening. That's a weak economy. That means that the Federal Reserve wants to, or it needs to support that economy. How are they going to do that? By lowering rates. So now that means that a very bad report would have meant that the Fed would have to stay maybe more cautious and not so hawkish. They wouldn't be looking to raise interest rates during a time that the labor market is already in trouble. So what does that translate to? That would have translated to less chance of a hawkish Fed. That would have translated to more weaker dollar, because you now have the potential for the Fed to be more dovish because the labor market is bad, right? Is weakening. So again, same information, but the two different results would have brought two different impacts to the market. But both of those results, the same question is, how does that tie into the overall narrative? Did that make sense? You can rewatch that, take notes on that. And again, I believe that will make sense. The more and more you join these sessions, the more and more you see us following the same narrative. Again, today was the same question. Does this help? Does this support the Fed's current stance of being more hawkish? Yes or no? To put it into simple terms, that was my main question from today. Without me having to say all of that in my own head, the main question for today was, okay, will this help the Fed be more hawkish or more dovish? And that was it. I understood a very strong labor market. If anything, that's going to make the Fed, be more on the hawkish side. Because you have a strong labor market. During a time where inflation is rising, you need to calm the market down, you could say. Elijah, high NFP, strong economy, central bank hawkish stance, possibly raising rates. Basically, right? And you want to get the basic translation from that, which is dollar bulls, right? You come to that analysis. AD, all of the different sentiments, like right now with the war going on and the central banks, things can change in any minute. All the new wars and important people, Fed staff, yeah, okay, I get you. The war in the Middle East, I will say that is a little bit confusing because it's very back and forth with the ceasefire, escalations, so it's hard to tell what the market is focusing on. But what I would say from that is focus on the bigger picture, which is the bigger picture is the war is still going on. So if the war is still going on, that's still negatively going to impact gold because we've seen that bonds have been skyrocketing as the war in the Middle East continues. So as long as we see the war continue and we see that bonds are continuing to rise and the dollar is continuing to stay strong, that basic translation for you is gold bears. Don't try to overcomplicate that, you know? Just if you can, try your best to keep up with the day-to-day articles, what you see. But since you join these sessions, you have the cheat code of having me talking about these things on a day-to-day basis, right? And the different meanings and all of that. So you can always just ask questions or you can just tune in and you know for sure I'm going to talk about those things, right? So I get exactly what you're saying. I don't want you to overanalyze this thing and get into this, what they call analysis paralysis, where you're analyzing the war in the Middle East, you're analyzing the central banks, you're overanalyzing everything that you see, and then you just become confused. You don't want to do that either. Let the price action do the talking for you, and as you join these sessions, see how we follow along with it. Because today, notice how we didn't talk really about the war in the Middle East. Because we know, okay, we've seen continued escalations after we saw potential for a ceasefire deal. We already know that that negatively impacts gold. We don't really have to talk about that too much. We already know that. And how we're going to confirm that is by seeing certain technical levels get broken. That's from the war perspective, looking at price today, you know? So, but again, we didn't overcomplicate it. We didn't need to look into all of that. Today was more so the focus was on economic data. So we know our focus is going to be on economic data and what that economic data means for the Fed. That's a very important question that you want to ask yourself. What does this economic data mean for the Fed? For every FOMC meeting, you have to ask yourself, okay, what is this going to mean? Like, what if the Fed says this during this FOMC, what does it mean for the market? If we see this economic report come out, how can we expect the Fed to react to this? And since we know what they're looking at, which if you look this up, if you look up forward guidance, you're going to see in fancy terms, they're going to explain it to you, but in basic terms here, it's just basically the clues and the guidance that the Fed gives so investors can basically price these events ahead of time. That's what we are doing today. It's what did this economic data mean? What does this economic data mean for the Fed? Does this help their hawkish or dovish stance? Today, this helped their hawkish stance. We could expect dollar bulls. Look across the board and you've seen dollar bulls across everywhere. The impact is everywhere. You see it on gold, even US 30 right now having some impact. Pretty much everything. Let's look at the dollar mainly. Dollars being impacted, of course. Euro USD, we see the impact. GBP USD, we see the impact. USD CAD, USD JPY. Look across the board at other pairs that maybe I didn't point out, and you're gonna see the impact, you know? Look at gold today. Again, without really overcomplicating it. It may sound very complicated right now in terms of like, because we're having this conversation about it. But once you really start to understand it, it just becomes an easy flow in your head, and it's just something to follow along every day. Today, from a technical perspective, it was as simple as just looking out for the break of lows and looking for retests and continuations. You know, what did you get today? Only the breakouts, no retests, and just aggressive continuations. We knew already when we were analyzing those lower time frames what we wanted to see, but what we were expecting, because we knew that the pullbacks were very short against the impulsive moves. So even during this time when we were calling this out, we knew a pullback into this area is a little bit not that likely because of the fact that it's just so impulsively moving lower. And right now it's still doing that. It's still impulsively moving lower, very short pullbacks, impulsive move low, short pullback. Right now it didn't do it that impulsively, but it's still clearly pushing lower. Definitely slowing down a little bit, we could say, as we reach these lows. We've had like 800 pips worth of movement, you know, so overall I think we had a very clean day. Like, think about that. Today is NFP. Think about those days where, and I even speak about it myself, NFP days were so difficult. Or just any day with economic data was just so difficult to trade, having no understanding. Today, to have that understanding and to see the markets play out very well is good. It's a good session to review, to be able to understand, because you also, again, this is not to confuse you guys, there is those days where you do see economic data come out in favor of, let's say, gold bears, and yet we'll see an impact going against it. You know, I've seen days where we have economic data being very much in favor of gold bears, but first price action will do a really deep pullback and then sell off. Those are things that are out of your control. And I would be so upset because it would be like price action, or the fundamentals would be bearish, but price action would be doing a pullback against that. I would maybe take 1 or 2 losses, be upset, call it a day, come back hours later before the market closes on Friday, because usually NFPs are always on Friday, and it's like 3 p.m. and NFP pushed like 1,000 pips in your favor below your zone, and you're just like, damn, I just got caught on the pullbacks, price action going against me. I'm there forcing a bias, forcing ideas into the market when the market is not aligning with my analysis. And then I end up missing on the moves that happened later that day. That happened at 11 a.m., you know, and I stopped trading at 10 a.m. because I'm here rushing trades during my trading session, you know? Look, even right here, like I'm gonna read a part of an article for you guys, just to give you the understanding or the basic translation of what this could mean, right? And this is an article that I'm getting from Reuters. Reuters is a pretty good tool to use, you know, and it's fairly cheap, you know. But watch, this is a report that came out after the NFP was released, right? So the U.S. economy posted, I'm reading this report. The U.S. economy posted another month of strong employment gains in May, confirming that the labor market was gaining traction after stumbling last year and potentially, this is the important part, potentially giving the Federal Reserve more room to keep interest rates unchanged amid rising inflation stemming from the war with Iran. So the clue right there, right? The basic, remember, as traders, we want to get the basic definition. What does that mean for the dollar? And what do we get that from? A small article right here. Potentially giving the Federal Reserve more room to keep interest rates unchanged. Ask yourself, is that more dovish or is it more hawkish? To keep interest rates unchanged amid rising inflation. In terms of the market, when you think about that. Or ask yourself the even easier question, right? Or come up with a more easy conclusion, I mean. If they're saying right here that this report gives the Federal Reserve more room to keep interest rates unchanged, think about this. This is what you're reading. This gives the Federal, I'm going to read it one more time. It gives the Federal Reserve more room. This report gives the Federal Reserve more room to keep interest rates unchanged. That right there, you scratch off the dovish idea. The idea of any rate cut belief that could have came from this report, the idea of that completely gets removed. So that right there falls into either neutral or hawkish. Because we're now dealing with what it says now, amid rising inflation, then this specific one would fall more on the hawkish side. Keeping rates unchanged would mean keeping rates higher for longer. That's still offering a higher incentive for investors to hold on to those bonds, right? That's still going to keep or cause for the yields to get higher. What did you see yields do today? Look at the rise in yields. Look at the dollar. Again, I don't need to show you guys everything, but you saw already the market impact across the board. You get me? That's a small report. That's like, it took me 30 seconds to read that. And that right there gives me a clue as to what the Federal Reserve can do with this information. What I was literally talking about earlier. How this economic data aligns with the central bank. What does this mean for the central bank? And if we have that understanding, we have the awareness and the understanding of what the market could potentially do. You see that? Other than that, like if you think, okay, what is this basic definition of this report? Like when you go on Forex Factory and they give you the basic definition. The basic definition is strong labor market, healthy economy. Healthy economy, good for investor, they want to invest, right? It's all about profit. It's all about return at the end of the day. So as an investor, you want to invest your money where employment levels are healthy. If employment levels are healthy, that means growth is very probable. They want to invest in that economy, right? That's basic definition right there. Basic definition, gold go down, US dollar go up. You get me? To put it into explaining it with CTE right there. Dollar up, gold down. That's your definition. I have seen only instances where gold and USD move in parallel. When is that? Sometimes it can, but for the most part, it moves against. Do you do this during Asia? It's like do this as in trade or like as in the live stream? We don't live stream during Asia. The trading, if you're asking that, it's the same thing. Like it's, concepts are the same across all sessions. Give me 1 second, guys. All right, my bad, guys. Let me see, Connie. So what can I read like an hour before news like CPI, FOMC, and NFP? The first thing I would say is you have to pay attention to the economic calendar. So if you go, for example, to GatesFX and you go to Trading Central, which is here on the dashboard, you go to Trading Central, the first option is going to be the economic calendar. What you'll see is this. You have all the reports that are going to get released. Here you can change it to this week, today, recent. I usually keep it on this week, so that way I see basically all the reports from this week only. But you can see, for example, next week, so you can prepare yourself for what is coming out next week. These reports usually get released once a month. Every single month, once a month, you get these reports, usually around the same times, as in like the same days. Like NFPs are always going to be on the first Friday, the first week of the month. All the labor market reports are usually going to be during that first week. Then you're going to have your inflation reports coming out. So you'll have now next week on, what is it? This is on June 10th, which is on Wednesday at 8:30. It's always going to get released at 8:30 a.m. Eastern time. You have your inflation reports. So like we were just talking about today, these reports right here, and especially like if you want, you can put it on high impact only. You can remove the medium, put it on high impact only. And you have now the reports that are usually what is going to have the strongest impact. So again, Wednesday, June 10th at 8:30, you know you can expect some strong volume, some strong volatility, because this report is going to get released. And you now know, if you listened and you paid attention to this stream, that that's going to have a direct impact on the market, because it ties in to what we're talking about, to the narrative, right? So the question remains the exact same thing, right? How does this report have an impact, or how does that affect the Federal Reserve's view? What's the spelling of the article? These are not articles. These are economic data reports. So what I'm telling you is that on GatesFX, on the dashboard, if you create an account with GatesFX, on your dashboard, you have Trading Central, and it's an economic calendar, right? So that's where you can look out for those reports. Do you ever watch the news while you trade on your personal? No, I don't watch the news while I trade. Nah. I'm more so watching the market reactions. When I see market reactions, I look for articles to see if there's anything going on, like how we did with the Iran war. There's tools that you can use to know what exactly is happening at that exact time. Like if any sort of news or things come out, like there's tools that you can use to be able to see how the market is impacting price at that time, right? There's a lot of tools that you can use online. You just have to know which ones are good. But all right, did that make sense for you, Connie? For next week, now you basically know what we're going to be preparing for next week. We have CPI. We know that that's the very important report to look out for. We know that the central bank is going to be closely looking at that. And we want to know the easy answer for us. Is inflation rising, or is it not rising? If it's rising, you know that that's going to add on to a more hawkish Fed. A more hawkish Fed will translate to a more stronger dollar. So therefore you have an understanding of what that impact can be. You know, because it's confirming what the Fed is being careful for. They're basically telling you, hey, if inflation is continuing to rise, then we're going to have to act. How are we going to act? By raising interest rates. What's the impact that you have on dollar when you raise interest rates? It strengthens, it goes up, while gold goes down. So we have that understanding. Now we know, okay, higher inflation report, dollar upside, gold downside. Same with the PPI, that's another inflation report. the following day. If you study on our YouTube, you have the days of CPI. Like you can go and study the previous month's CPI days, which we did the exact same thing. We were looking to see whether or not inflation was rising or not. I can point out the exact date of that, which we saw inflation rising, and we prepared ourselves for further sells on gold. Did we or did we not? I know we did. Let me see. I can literally pinpoint that on this 1 hour. Watch this. Tuesday, 8 a.m. Tuesday, May 12th. At 8 a.m. is when we saw this downside move, because we saw higher inflation in the US. If you go here and you go Tuesday, May 12th, look at it. US, the inflation report, 3.8% above the expectations, 2.8% above the expectations, 0.4% above expectations. Gold at that time, 8 a.m., which is this candle right here. Afterwards, look at the move down. Go and study that on the dollar. May 12th. Right here, May 12th. This is May 12th at 8 a.m. You had a minor reaction, a slowdown. Overall, following that bias and that analysis, dollar bulls. You see that? Same narrative, same pieces of information, just reacting day to day, taking it level by level. So I think today was another great example of the importance of technicals and fundamentals. The one you read earlier, Reuters. Reuters is a paid service, very credible. You can trust Reuters with your financial information. I've never had issues with Reuters. I would just recommend, dive into that trader mindset, into that mentality, and start reading some articles early in the morning to get reviews. Again, you have me doing your reviews, but if you want my advice is go read those reviews yourself. I always read those reviews. So that way I know what I'm following. I know what happened overnight. I know what the market is reacting to right now, what the market is focusing on, right? It's information, and that's exactly what I did today. Today I read another article. I knew what I was expecting this morning. It's a matter of just sitting here, waiting, and letting price do what it does. And today, again, perfect, beautiful example. So in terms of reviews, guys, today's NFP report, just so we can end the stream now. NFP report came out stronger than expected, and we had the strong dollar upside momentum. Gold, very, very clean technicals towards the downside. US 30 ended up breaking below our areas of interest, so impulsively breaking out of our trade zones, which were our buy zones at this area. And so that one went against our overall analysis of being more bullish. But again, we can't fight those market conditions. We understood what lows we had marked off, and you see how clean those moves took place below those areas of interest there. Then USD JPY today, interesting day because you had a literal intervention take place. So a little bit tricky there in terms of volatility and aggression. But I think the best moving pair for us today, and what really gives us a good example of clean price action, is gold. So props to you guys that were able to take some good trades. And yeah, guys, we're pretty much aware, not prepared, but we're aware of what we're looking out for next week. Next week will be very important. It'll be the CPI week, inflation reports to come out. But all right, guys, I appreciate you all. Thank you for your time. It was a great trading week that we had. We had very good opportunities. Markets moving in our favor for most of the time. So I will see you all on Monday. Take care, everybody.